go.
Yep. 3 words. Student loan debt. The kryptonite to most Americans I lost my train of thought there because student loan debt, just saying the word just hurts, right? The biggest crippler to Americans to buying a home. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to inform you on what's a mortgage, right? So tonight, guys, we are going to go over student loans. But before we do that, right, how to qualify buying with a student loan, do me a huge favor. If you haven't followed us yet, please hit the subscribe and notification button so you're notified every time we go live or post new content. We go live Monday nights on Facebook and YouTube at 9 p.m. and we post content daily on Facebook, Instagram, and TikTok. So if you're not following us on all the other platforms, definitely do so. We leave a lot of micro tips out there to help empower you on what's a mortgage. All right, guys, what mic do you use? Oh my God, got a question. I thought it was a mortgage question, Gus. Dang it. Guys, so also
SM7B.
What?
SM7B.
SM70? Is that right?
SM7B.
SM7B, Gus. All right. So guys, also, it's an interactive channel. So if you have questions regarding mortgages, Gus, right? I'm kidding. If you have any questions, please ask and leave comments. All right, guys. So tonight, I wanted to go over a subject which a lot of people always ask. Minh, I can't buy a home because I have student loans. What should I do? Minh, I have student loans. What should I do? Minh, student loans are stopping me from buying a home. What should I do? So tonight, we're going to answer that question. The reason why we're going to attack that question tonight, seems like pandemic's coming to an end. Life is going back to normal. Now people have to take into consideration, I want to buy, but I got student loans. What's my next step? Also, FHA changed their guidelines, making it more flexible for you to buy with a student loan. All right, guys, so let's get into it. Student loan, right? How to buy a home with student loans. So you have student loans, that's pretty much slowing most Americans from buying a home. Like as soon as you pay off your student loans, then you can buy a home. Or because of the student loan payments, you can't buy a home. All right. So tonight we're going to break down how can you buy with student loans. But before we go into monthly mortgage payments and how banks view student loans, where is your student loan at right now? Okay, so we're going to attack. If you have questions, we will answer all your questions at the end of the live. All right, Steven? So where's your student loan at right now? There's only a couple positions your student loan can be at. Okay, so
Student, if you have student loan, comment how much you have left.
Yeah, if you have student loans, comment how much you have left because we're going to go over with your balance of your student loan, what payment are they going to add to your debt to income ratio? All right, so let's get into it. The first question, the first thing to figure out is, where's your student loan at? Are you making a fully amortized payment? Is it in deferment, forbearance, or is it in income-based repayment? If it is in collections, most likely you cannot buy with an FHA loan or a VA loan because if you defaulted on student loans, you cannot get a government loan. You would have to get yourself out of that collection first, Crystal, right? First, you have to get yourself out of collections into a payment plan before you can go ahead and purchase a home, right? So you're either going to be in fully amortized payment, deferment, forbearance, or income-based repayment, okay? Depending on what category you fall under, right? Depending on what category you fall under will determine the monthly payment they will add to your debt to income ratio. Let's go with the obvious one first. Let's go with, oh, what the heck? The button's changed. Fully amortized payment, right? So if you have a fully amortized payment, that is the real payment, the full payment. That means you're done with school or your student loan time is up and it's time to start paying, right? So of course they check your income. If they know that you have a regular income, you would be hit with the full payment, right? It's typically on your credit report. Whatever is the payment on your credit report, that's the full amortized payment because sometimes you see a payment there, but it's not a fully amortized payment. And most underwriters can sniff that out in just a second. And that's why when a loan officer runs your credit and eyeballs the deal, it's a bad situation for you. I see so many people go into escrow because the lender didn't hit them with the full payment, right? And because they just didn't hit them with a full payment and it's just a partial payment, guess what? It can knock them out of qualifying once they go into escrow. But if you have a full payment, it's gonna be your real payment, right? It's gonna be on your credit report, and they will add that payment to your DTI. If there's a fully amortized payment, there's no way around it, right? That payment needs to be added to your monthly debt to income ratio, okay? So if you're in full payment, whatever the payment is what they add to your DTI, okay? Let's talk about the next phase, right? You're either, I'll move this mouse right here. You're either in deferment, right, or forbearance. Okay, so if you're in deferment or forbearance, a lot has changed, right? If you're in deferment or forbearance, the old rule was 1%. FHA used to hit you with 1% or the fully amortized payment, okay? On conventional, if you were going Fannie Mae, they would hit you with 1%. If you're going Freddie Mac, they hit you with 0.5%, okay? So the average student loan right now is about $30,000 nationwide. So in the old rule, they would hit you $300 a month to your debt to income ratio. Of course, if you had a $100,000 student loan, they would add $1,000 a month to your payment, okay? If you had a $50,000 student loan, they would add $500 a month. But now they're adding only 0.5% on the new rule. So it doesn't matter if you're going FHA, conventional, or USDA or VA, it's 0.5% of the deferment or forbearance. If they can't find your payment, right, and they know it's in deferment or forbearance, they're going to add 0.5% to your monthly payment. So you can still buy a home, right? Before this rule came out last week, of course, most people who do, for some reason, when they're buying and they have student loans, most likely they'd have to go FHA, right? Because they don't have the right credit, right? Because they just finished school or the student loans is affecting them and they couldn't buy with conventional. So when they tried to buy with FHA or USDA, right, they were hit with 1%, which stopped a lot of people from buying a house. Whatever reason your student loan is in deferment or forbearance, right, you still have to add that payment. There's no way around it. And that right there also, guys, is a lot of loan officers will run your credit and you think that they, oh, you know what, you thought you got one over on them, right? You have a deferment or forbearance, they're not adding a payment to your DTI, but all of a sudden you go in escrow, the underwriter catches it and they add that payment to your DTI. So the AUS, the automated underwriting system, does not catch student loans. They have to manually put them in there. Unless it's a fully amortized payment, if it's in deferment or forbearance, the loan officer has to manually add it in there. And a lot of times when they're issuing you that pre-approval and they're not combing through the credit report correctly, right, and they don't add that payment, all of a sudden you go into escrow, you fall out of escrow. It actually is very common mistake. So if you have a student loan, be upfront with your loan officer. The reason why, if they don't catch it, the underwriter will. Trust me, the underwriter, if not the QC department, it's going to go through 5 more hands. The last thing you want to do, you paid for an appraisal, you paid for a home inspection, you release your contingencies. All of a sudden, right, they catch the student loans and they go with the 1% back then. Now they go with the 0.5%, but you didn't tell the lender and it didn't show a payment. And now that payment's added to your debt to income ratio and you fall out of escrow. So definitely when you are buying and you have a student loan, be upfront. Okay. So if you're in deferment or forbearance, it's 1%. It used to be 1%, but it's only 0.5% right now. So if you had a student loan of 63 grand, it'll be $315. All right. Hopefully that helps you out there. So we talked about fully amortized payment. Whatever the full payment is, add that payment to DTI. If you're in forbearance or deferment, it's 0.5%. Okay. Now the third position to be in on your student loans is income-based payment, right? Repayment, right? So if you're in IBR, income-based repayment, right? On FHA, it used to be 1% or the fully amortized payment. Even if they run your credit and they see a partial payment, the old rule, right? It was 1% or the fully amortized payment, right? The new rule, okay? The new rule is pretty much whatever the payment is on your credit report on an FHA, VA, or USDA, they add that to your debt to income ratio. So let's say you have a $100,000 student loan, right? We had someone here who talked about student loan being 120 grand, right? Mrs. Nisha, right? 120 grand student loan. And the IBR payment is 0. Guess what? They add that 0 to your debt to income ratio. Okay. If it's, I think someone else had a a $10,000 student loan right here, right? I think a 10,000 or 100, 10,000 right here. IDR, I'm sure she meant IBR, right? They add that to your payment, right? On 10,000 bucks, they add $100 a month, or they add $100, they add $50 a month, right? So definitely whatever is on your student loan, right? If it's an income-based repayment, and if it's an income-based repayment, whatever the payment is what they add to your debt-to-income ratio. So let's say you have a $200,000 student loan, but the payment's $200 a month. They add that $200 a month to your student loan. Back then, if you had a $200,000 student loan and you're an income-based repayment, they would add $2,000 a month. All right. So the trick is, if you're in income-based repayment, before you had to go conventional. Now you can go FHA or conventional or USDA, and there's no payments, and they can validate that it's income-based repayment, not deferment, not forbearance. Whatever the payment is what they add to your DTI. So when they run the credit, if there's a partial payment on there, they're going to hit you with that partial payment, whatever the payment is. I think that's going to open up more doors for more buyers. Like I said, the government's doing everything under the sun, which I don't understand why. I'm not saying that they shouldn't help out with these programs, but what they should focus their energy on is releasing more homes. Now you're bringing more qualified buyers, people who either finished school or didn't finish school with student loans. They're bringing more buyers into the market. You got the Helpers Act. You have the tax credit, right? You have the grant. The grant is not a bill yet. Okay, the tax credit is a bill that has not passed, but is a bill for 2021. Okay, the Helpers Act for first responders, right? For teachers, right? It is a bill in Congress. And this student loan, the way they view it, has passed. It is a guideline. So if you're in income-based repayment, guess what? You're in luck. You don't have to wait to get better credit to go conventional. You can buy now FHA. Okay, so let's recap before we kind of break down how does it affect home ownership in 2021 moving forward. Okay, if you have a fully amortized payment, okay, here, if you have a fully amortized payment, whatever the payment is, that's the payment they're going to add to your debt to income ratio. Okay, so all right there, right, fully amortized payment, whatever the payment is, they're going to add to your debt to income ratio. If you're in deferment or forbearance, whatever the balance is, they're going to times it by 0.5% and add that to your debt to income ratio. Okay. If you're in income-based repayment, whatever the payment is on your credit report, they're going to add to your DTI. So if it says $10, they're going to add $10. If it says $1,000, they're going to add $1,000. But if it says 0, you get hit with 0, which means it's going to push you further into home ownership. You will have a greater chance now to buy a home. Okay, so that's how banks are viewing student loans when you're trying to buy a home. They do view it as debt. What type of debt? Fully amortized, either deferred or forbearance, or income-based repayment. If you are in collections, you cannot buy FHA. You'd have to buy conventional. But typically, if your student loans are in collections, most likely you might not have the credit to buy conventional. Okay, so now if you're in collections, get yourself out of collections. Get yourself on a payment plan, right? Get yourself into IBR. Do something. But the longer it sits in collection, the further you are from home ownership, okay? So get off your bum, right? Get out of collections. Have your lender update the Cavers report for you so you're not on this blacklist so you can buy a home, because now it doesn't show that you are outstanding, you have any outstanding debt with student loans. Okay, so hopefully that helps you out. So let's get into how is it going to affect you buying a home? Okay, how's it going to affect you buying a home? Right now with the new rules, it just increased your buying power. So remember, for every $350 a month in payments, that's $50,000 more home. So if you had a student loan payment of $350 or more, you just gained $50,000 more buying power. Typical American who doesn't qualify is typically off between 50 to 100 grand. So between 350 to 700 bucks a month, if you eliminate it, you will get either 50,000 to 100,000 more buying power, which will bring more buyers into the market now, right? So with this new guideline, hopefully it helps you out. If you're in one of these positions, now you know if you have a fully amortized payment, how to handle it. If you're in deferment or forbearance, what payment they're going to add to your DTI. if you were in income-based repayment and it stopped you from going to FHA, now guess what? You are on your way to home ownership, right? Like I said, great for people who have student loans. Now you have a chance to buy a home. But remember, we are bringing more buyers in the market. So some of you guys out there still think, oh, the market's going to crash. Seems like the government, the system is doing everything under the sun to keep demand up. If you were thinking of buying a home, you guys should start a group for like future home buyers who don't want to overpay, right? Start a group, convince 2/3 of America to not buy. That's the only way prices are going to come down. Seems like it's going to be hard because we're bringing more buyers back into the market. But these buyers now who have student loans will either qualify for a home or qualify for more home, okay? Hopefully that helps you out. Guys, if this video brought you value, do me a huge favor. Please save this video, share this video, and like it. Also, guys, if you do enjoy this content, if you haven't subscribed yet, hit the subscribe button, all right? So you're notified every time we post content like this up, okay? Let's get some Q&A here.
And then tell everyone to ask a question.
Guys, if you have a question, please ask tonight. What up, Erica? What's up, Lorena? Gus, quick question. Hopefully I answer your question for you. Lorena, Steven, I have long employment history, but recently transferred to a new company. How long do I have to wait to apply for a FHA? Steven, if it's in the same line of work, you can buy after 30 days, okay? If you are in the same position but different company, you have to wait only 30 days. But if you're changing position and a completely different line of work, you would have to wait 2 years. If you went from self-employed to W-2, right, in the same line of work, you only have to wait 30 days. If you go from W-2 to self-employed, you'd have to wait a total of 2 years, okay? There's ways to do it with 1 year, but reach out for more, for deeper description on that, okay? So hopefully that helps you out, Steven. Also, if your old job had your new job has overtime or bonus, but your old one didn't, you cannot use your overtime or bonus. You need a 2-year history of overtime or bonus to use it, right? If you have more questions regarding employment gap or change of employment, give us a call, 714-790-9697. You can always email us at info@whatsamortgage.com and we will answer your question. If you do need help getting approved, we have loan officers that we affiliated partners that we do work with that specialize with all this changing in jobs. Definitely, Steven, I would look for a mortgage bank. I wouldn't reach out to a mortgage broker on something that's a job change like this because you want certainty, right? Ask your lender, hey, can you do an underwritten approval for me up front? Right? You want to clear the conditions of your employment changes, right? So when you do find that house, you're not dealing with the problems when you're in escrow. You want to deal with those problems up front. And the best way to do that, get an underwritten approval and clear your underwritten conditions. Hopefully that helps you out, all right, Steven? What up, Guadino? Yeah, definitely got to get that out. Hopefully I answer your question, Mrs. Nisha. That's $600 a month. You're going to add to your debt to income ratio, right? If you're deferred $4,300, that's going to be what, 20, I don't even know what 5% of 4,300 is. 1 second here. 4,300, 4,300 times 0.5%. It's like $21.50. All right. Student loan $2,400. Right now, I'm currently owed $28,000, but returning to school and will take another $35,000, total of $63,000. Currently not paying anything towards it, but when I graduate, I'm paying $153 a month. I'm sure that's income-based repayment, so you would add that payment, Gus, to your DTI. Is it a good idea to pay off your student loan or car loan first? Misha, what I would do is this. See what you qualify for first, okay? If you're not happy with what you qualify for, right? Ask them if you paid off your car, right? What would you qualify for when you pay off your car or your student loan? When you find that out, then you have to factor in how long will it take to pay off your student loan or your car. For example, if the home is $500,000 and it takes you 2 years to pay off your car or your student loan, add 5% appreciation to that home every year. So every year you don't pay off your car loan or your student loan and the home is $500,000, you would tack on at least $25,000 a year to the purchase price. So if you don't pay it off year one, that's $525. Year two, it's a little bit more than $525, but you get the legist. It'll be $550 or $560 or something, okay? So when you decide, hey, should I pay off debt first, right? Look at it, it's like, hey, cool, I'm going to pay off debt. How long will it take for you to pay off debt? And how much money can you really save? Okay, hopefully that helps you out. My student loan has a balance of $600. Will a lender include that? Yes, if they're whatever the balance is, Rick G, they include that balance in your DTI. Okay, what's going on, Mika? My student's 13 grand left. I've been told a lot of families were leaving California after kids get out of school for summer, and that should increase inventory. Do you think that is the case? Do you know how many people, Rick, would have to leave California for that to happen, right? So California has 44 million people, okay? 44 million people. Did you know that you got to add Florida and Texas together, which is 50 million, to beat California? So out of the 50 states, California is number one. It takes number 2 and 3 to be added up together to beat number 1. So even if there was an influx, it would get eaten up in seconds, Rick. All right, hopefully that helps you out. Is the overtime count as income? Ferris, they will count your overtime as income as long as you have a 2-year history. Hopefully that helps you out. Thank you so much, Crystal. See here, Steven, same position for 14 years. Then you're solid, Steven, with their job change. After 30 days, they'll use your new income. Okay. Have you ever seen cases where a lender runs a soft credit pull after 90 days and buyer's credit score has improved? In that case, would they run a hard pull to get a better rate? No. So, Rick G, in 90 days, if they at least do a soft pull and they see there's nothing wrong with your credit, they leave it alone. Okay? You could ask the lender what I would do, Rick. If it was me, have the lender run a hard pull after 90 days. If the score improves, have them use the new credit score. But if the score didn't improve, have them use the old one. They can still use the old one because within 120 days. Don't tell anyone. Shh. All right? Is the overtime count as income? Yes. Man, that was some pretty good stuff, right, Andy? Andy disappeared. I currently pay $610. I was told $12,000 towards. I currently pay $610 a month. What? I was told to pay $12,000 towards a car to drop the monthly to $300 a month. Do you think it's worth or save the month for the down payment? If your car loan is a fully amortized payment, even if you put the $12,000, it's not going to drop the payment. The payment goes. It's been amortized already. You're just shaving off interest. If it was me, I would. It's better to pay off the car. So think about this. Even if you take that $12,000. If you can find a way to drop the payment $300, it would be better. However, if that works or not, I don't know. Okay, but I can tell you, typically on an amortized loan, even if you drop 12 grand towards it, it's not going to drop the monthly payment unless you're on some interest only type of loan. Okay, so if you're for every $350, okay, you can drop off is $50,000 more home. It's hard to bring in $50,000 compared to dropping the payment, right? $350. So it was me, Gus. I would find out how to drop your payment $300. Maybe you put in 12 grand and you refinance the car down, right? Like let's say it was a 5-year loan. Okay. Well, I'm just saying, I'm sure you paid down the principal already. Throw in 12 grand. Let's say it's a 5-year loan. You pay 2 years on it. Do a 3-year refinance on the car. Drop the payment because they're going to recalculate the amortized payment on the new balance. So if you pay down your car, let's say you're 3 years in the loan. Let's say you have a 6-year loan. You're 3 years in, do a 3-year car loan. Drop the payment. That would be worth doing. If you could do that, that would give you more home compared to taking 12 grand and putting into your down payment. If you took 12 grand and put into your down payment, it's going to change your payment $50, right? That's why I tell people the best way to increase the most buying power is to pay down debt. Because every dollar of debt you have to make $2 of income to counteract that, right? So if you have a $100 debt, you have to make $200. You have a $600 debt, you got to make $1,200, right? So better to pay down debt than to bring in a bigger down payment. Hopefully that helps you out. So also check this out. So if you take a $500,000 home, right? You increase the down payment you increase the loan amount by 10 grand to get closing costs. It would change the payment only $50. That's why I know if you bring in 12 grand, it's going to change the payment $50, around $50. Okay. You're my boy, Blue. You're welcome, Rick. Stephanie, close to start 90-day escrow. However, by the end of September, need to renew IBR. Will that affect? I would go ahead. That I don't know. It all depends on the lender. It all depends on what the underwriter wants. I would renew that. I would get in line to renew that thing ASAP, Stephanie. All right. What happens if you close late and the IBR hits? You're gonna be in bad shape. All right. Take care of that ASAP. Really appreciate the info, Min. Always just close on my home after following all your advice. You're welcome, Tao. Congratulations on your home. Right. Overpriced homes right now. Crazy to buy. How much can I use from my INS? Overpriced homes right now. Crazy to buy. Yeah, I feel, even though you feel like homes are overpriced, people are offering to buy it and they're qualifying to buy it, right? The government is manipulating interest rates right now. Because the government is manipulating interest rates, keeping rates low, that's why prices are higher. If they were not manipulating interest rates, right, rates would go up, prices would drop, which actually would make your mortgage payment higher. So, yes, do people say prices are high? Yes. But if right now the governments weren't buying mortgage-backed securities, it would shoot up rates. And how people qualify, I don't think prices would drop as much as you think. Okay? Hope that helps you out. How much can you draw from your 401k? Ferris? If you draw it out as a hardship, you can pull up to $10,000 without any penalties. Anything past $10,000, there's a 10% penalty. For example, you draw 14 grand on that 4 grand, you would pay $400. Okay. But when you pull out as a hardship, you are subjected to income tax. And there's a 6-month to 1-year cool off period where you can't contribute to your 401k. If you pull it out as a loan, you can pull out up to 50%, up to $50,000 of what you contributed to your 401k. You're not subject to income tax, right? Because it's a loan, right? And these loans are typically due between 15 to 20 years. And the interest goes back to you, your 401k, right? It doesn't go to anywhere else. It doesn't affect your DTI. There's no cool off period. But if you leave your company, right? If anything over 10,000, it's going to be subject to income tax because it converts from a loan to a hardship. Hopefully that helps you out. You like that one, Andy?
Yes, that's almost exactly.
Yeah. I have 2 car lease payment total of $500 a month. And the lease ends February 22. And with total of $4,500 lease, a lot of lenders are giving me total different loan budgets. How much max I can afford should I pay off the car lease? So, Sasan, here is the answer. If you have a car lease, and this answer right here, you can take this to the bank. You can verify this with anybody, okay? If you pay off your car lease, there is still a monthly payment on your DTI, right? You have to pay off your car lease, return your car, and show proof that you have another car, right? Let's say it's a used car that's paid off. You would have to prove to the underwriter that you return your car. You have proof that they've released liabilities on it, right? And you have a new car. Then there's no payment to your DTI, right? You'd have to tell them you have an old car at home or something if you don't want to add any payments to your DTI. But if it's a car lease, even if you pay it off, it will still hit your DTI. Hopefully that helps you out. You're welcome. How much can I use for my 401k? Which I answered. What up, Eric? Eric and Tina, what's going on, fam? OG's on right now. What about rolling a 401k from one company to another company? For the rule that I know so far, even if you roll it, whatever you pulled out already, since it's not rolling in your 401k, right, goes from a loan to a hardship. So let's say you pulled out 30 grand as a loan, right? Or let's say do the full 50 grand. You paid back only 20, okay? And you leave companies. So on that 30 grand, on the 20 grand, you're going to be hit with 10%, which is $2,000, right? And it's subject to income tax. Hopefully that helps you out. All right, guys, hopefully that information helped you out. Now, if you know anyone with a student loan, share this video with them. All right, guys? Also, one last thing, if you're not following us on TikTok or Instagram, definitely follow us. We post daily mortgage tips on there. All right, guys? And we try to bring some valuetainment to you guys, right? I've been working on my dancing. All right, guys. Thank you for everyone who watched, liked, and shared. We want to end all our episodes with our attitude is gratitude. Without you, there'd be no us. So thank you guys so much and have